Hello and welcome to Cafe Mutual YouTube channel. Friends, many categories of debt funds are now delivering better than inflation returns. And one such all-season fund category is banking and PSU fund, which have been doing very well. So, has the time come to increase allocation to this evergreen fund category? Let us understand from our expert fund manager, Pranay Sinha, senior fund manager, Nippon India Mutual Fund. Pranay has over 15 years of experience in preserving and creating wealth for fixed income investors. So, let's welcome Pranay. Good morning, Pranay.
Good morning, Ishant, and thank you for having me over. And good morning, viewers of Cafe Mutual.
Okay. So, Pranay, my first question to you is that what is your near-term outlook on debt markets?
So, our near-term outlook on debt market is positive. We feel that there is a reasonable scope for yield to come down. The reason for it being is that we have seen consistent improvement in macroeconomic indicators locally, be it fiscal, be it inflation, or be it CAD. All these three parameters, we have seen positive improvement. We feel that because of this, the yields in local markets can come down, which means that duration funds can benefit. A fund in the intermediate duration category, like a banking and PSU fund, or a higher duration fund can benefit from yields coming down.
Okay. So, Pranay, a majority of debt funds are now delivering better than inflation returns. So, why do you think that the trend will continue from here?
Sure. So what has happened in last previous year is that we have seen rates coming down from an absolute high level, which means that we have seen some MTM gains to the debt funds, which means that this has helped the debt funds to deliver over the inflation return. Why is it going to continue in near future is pretty simple, and because of some reasons which I will outline now. First is that RBI has been focused to give the savers a high real return, which means that even the debt funds benefit from this and give higher than inflation return. Second is that we have seen improvement in macroeconomic indicators, which means that there's a good chance of rates going down, which will provide positive MTM to the debt funds. This added with the high absolute carry of this fund would mean that these funds are most probably going to deliver over the inflation return in near future.
Okay. So, Pranay, Amphi data shows that Nippon India Banking and PSU Fund has outperformed its benchmark consistently. So, what are the two things that has helped you deliver alpha in banking and PSU
So,
fund?
so we have done pretty well in terms of performance. What has helped us is that first is the discipline which we have in this fund. While as you know that the banking and sector fund doesn't have any restriction on duration, we have an internal restriction on duration which is mandated by the internal fund casing framework. Which means that we take risks because obviously we cannot give returns without risk, but these risks are pretty contained, and this provides discipline under which the fund managers can give alpha to the fund. Second, the fund has a pretty conservative outlook, which means that while it may provide some amount of lower risk in short term, it provides you and helps you avoid any accident over the long term. So the first part gives you a short term alpha, and the second part gives you saves you from taking unnecessary risk. This two combined helps us to provide outperformance over a long term period.
Okay. Talking about the average duration, the fund has average duration of more than, it's more than the category average. So, what is your take on this?
So, as I had outlined in the first question, we are pretty positive on duration. The reason is that the macroeconomic indicators, both locally and globally, are supportive of it, as I had outlined. This means that we can see yields going lower, which would benefit any kind of duration funds. So, this is the reason why we maintain a duration higher than the category average.
So apart from AAA rated and high quality debt securities, the fund has also exposure to A1 plus rated papers. So can you share the rationale for this?
So these are mostly bank CDs which we have exposure to. These are now we are very careful to take only exposure to bank CD which has the highest short term rating. But what we have taken extra care is that these highest short-term ratings should always map to the highest long-term rating. So these A1 plus rated banks have the highest AAA rated long-term rating also. This ensures a very, very conservative portfolio for the investors.
Okay. So, Pranay, one last question. Why should MFDs recommend Nippon India Banking and PSU fund to their clients?
There are a couple of reasons. We have over a long-term period provided outperformance with respect to not only the benchmark but also to the peer group. This has been a function of the disciplined approach. So what we have believed is that a fund manager should take risk, but this should be within a framework and a disciplined framework. So the allowance to take risks within a disciplined framework is what has led us to outperform in past. We believe that this framework and this disciplined risk-taking approach will serve us in the future also, and that's why we hope that our outperformance will continue, and that's why we hope that the MFDs will continue recommending this fund to their investors.
Okay. So, with that, we have come to an end to this interesting session. Thank you so much, Pranay, for your valuable time and inputs.
Thanks, Nishant, for having me over, and hope you have a good day and a good day to the investors also.
Okay, and finally, I thank each one of you for being such a wonderful audience. Have a great day at work, guys. Bye.
Thank you.